Hello everyone. Yeah, I'm back after actually so many days. And today I'm going to talk about a company which is not which is very well known but not with the investors. Why smart investors missed Pidilite Industries. Everyone in India knows Pidilite Industries, and you have used Fevicol in your childhood. You've seen it in the ads, and if you can remember Chora Dea ad in seeing that on the TV. That's actually, we remember the brand, we remember, but it's not such an exciting stock for investors. Now, this very ordinary looking company quietly created enormous wealth. Not overnight, not dramatically, but steadily over a long period of time. So the question that I'm going to talk or discuss today is that whether Pidilite performed well in the stock markets. The real question is, why did so many investors never take it seriously? Think about how most of us are trained to look at markets. We are taught to look for change, for disruption, for something new, a new technology, a new product, new growth story. But Pidilite had none of that. It did not reinvent anything. It didn't promise a bold transformation. It did not talk about the future in flashy ways. So it got labeled very quickly as a mature company, as boring company, and nothing special in there. And once a stock gets that kind of a label, most people mentally move on from that stock. And I've heard the same questions come up again and again. Where's the growth? What's the catalyst? Why would you buy this particular stock? Why now? And these questions, of course, they are intelligence questions, but they are also wrong questions. Now, what you are really looking for in stocks when you invest in stock is long-term wealth creation. Now, because markets don't actually reward excitement. Excitement is rewarded in terms of speculation, in terms of short-term rewards. Markets for long-term, they reward reliability. They reward companies that keep showing up, doing the same things well without blowing themselves up. That's what Pidilite is. So look at what Pidilite didn't do. It did not change leadership every few years. It did not chase unrelated businesses. It did not deploy capital just because money was available. There was no urgency to look clever for them. Instead, they were very patient. They used their pricing power very, very carefully. Cash flows were reinvested over a period of time, gradually, slowly, and they expanded by inch, step by step, not because they lacked ambition, but because they understood the risk in the market. And that kind of thinking doesn't look very impressive, doesn't look very exciting. It's short term. It looks quiet. Has the uncomfortable part for smart investors, and smart investors often say that they are looking for good quality stock, but in practice actually they are looking for a story, exciting story, something which can be explained easily, something that sounds interesting, something that feels like a bet. Pidilite didn't offer any of that, and there was no big narrative to sell. So no dramatic turning point, no moment where everybody, suddenly realized that something had changed. It was just pure execution. And execution without drama is very easy to underestimate. Another reason this was missed is timing. There was no single year where everything suddenly clicked. No massive re-rating, no breakout moment. The reward for this company stock came very slowly, year after year, as the confidence kept building up. Now, as no mistakes happened, no news came out, cash flows were going on the business was doing well, and it wasn't in the news. So that's a problem. So compounding doesn't feel exciting while it's happening gradually. It only looks impressive once you look back, when you connect the dots. By then, most people feel like they've missed it. So let's be honest about what really happened with Pidilite. Pidilite was not a hidden company, it wasn't obscure, it wasn't misunderstood, it was just dismissed. Dismissed because it was disciplined, it looked passive, it had good governance, it looked uninteresting. Because avoiding risk feels like doing nothing. And in markets where action is constantly rewarded, restraint rarely gets attention. Now, why I'm stating all this is that Pidilite is not just one story. This story is about a pattern that smart investors underestimate again and again. Smart investors like us, I'm talking about. Quiet leadership is not, premium. There's no premium for quiet leadership. There is no premium for avoiding mistakes. And the markets did not miss this company because it couldn't see it. It's because it looked very unexciting, uninteresting. In this way of thinking, I would like to mention that if you would like to hear some similar stories and if you would like to continue this conversation about risk management and governance, you can reach out to me directly. Thank you. Have a good day.